Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The US dollar has retreated to lower levels, similar to its previous visits since the end of January. Last week's decline was prompted by reports that US retaliatory tariffs would be postponed until April, allowing for negotiation and potentially easing terms. This development had a greater impact on the dollar, compared to the Federal Reserve's increasingly hawkish stance and the unexpected rise in inflation. Midweek data revealed that consumer inflation accelerated to 3.0% year over year, reaching a 6-month high and a notable increase from September's low of 2.4%. Core inflation remained steady at 3.3% over the past 8 months. Additionally, the Producer Price Index, a key inflation indicator, climbed to 3.5% year over year, its highest level since early 2023. With inflation rates surpassing targets, the Federal Reserve may adopt a more restrictive approach, maintaining interest rates above inflation levels to curb it. This strategy could create a bullish scenario, particularly as other major central banks consider easing their policies. U.S. stock indices continued to stabilize and showed strength as the week progressed, with buyers responding positively to the news. At the start of the week, Federal Reserve Chair Powell reassured lawmakers that there was no immediate need for an interest rate cut. Following the January pause, markets are now pricing in a 95% probability that no rate cut will occur in March. This sentiment was further reinforced by consumer inflation and producer price data, which came in significantly higher than expected. Surprisingly, this did not spark a sell-off in equities. Instead, the initial dip was quickly reversed, and by Thursday, the NASDAQ 100 approached the 22,000 mark. In January, this index had found support during dips to the 50-day moving average. A similar trend was seen with the S&P 500, which experienced active buying below the 50-day average since mid-January. By the end of the week, there were efforts to reclaim lost ground. The growth trajectory of gold has become less straightforward. After briefly surpassing $2,940 at the start of the week, gold experienced a sharp pullback of nearly $80. However, by the week's end, the price rebounded, signaling that while buyers remain cautious, they continue to apply upward pressure. On daily timeframes, gold has entered the overbought territory on the RSI index. Historically, this has led to a temporary pause rather than a reversal. On weekly timeframes, the market still favors bulls, as the pullback over the last 2 months has created space for further acceleration, easing the overbought condition. Oil prices rose by 4% during the week, fully recovering from 6-week lows following calls between President Trump and the leaders of Russia and Ukraine, which hinted at potential geopolitical detente. However, the decline was largely driven by a third consecutive week of growth in U.S. commercial oil inventories, which increased by a total of 16.2 million barrels. At the same time, production remains near historical highs of approximately 13.5 million barrels per day. The long-term technical outlook favors bears, as oil is trading below both its 50 and 200-week moving averages. Notably, selling pressure intensified after touching these levels, reinforcing the notion that sellers continue to dominate the market. The cryptocurrency market has been stabilizing at a lower level since early February. The $3.3 trillion capitalization mark is acting as resistance, causing the market to reverse downwards quite swiftly. In December, this level served as support. The cryptocurrency fear and greed index has risen to 50, trying to push off the local bottom. Bitcoin is trading near 96,000, with the 50-day moving average acting as impenetrable resistance, halting growth since early February. Technically, this signals a deeper correction pattern, potentially extending down to 93,000. However, the prolonged consolidation remains a cause for concern. Ethereum is trading the area from 2,500 to 2,700 after a more than 20% failure in early February. The major altcoin is trading below its 50 and 200-day moving averages, with things heading for a death cross when the fast average dips below the long average. The impressive inflows into ETFs have so far failed to turn the coin's momentum around. Deep declines are being bought out, but it is not possible to confidently move to growth, as crypto enthusiasts have other favorites in this market cycle. Several key macroeconomic events are scheduled for next week, including rate decisions in Australia and New Zealand, Canadian inflation data, and Flash PMIs for Europe. On February 18th, the Reserve Bank of Australia, RBA, is expected to cut the key rate for the first time in this monetary cycle. Australia has been more cautious in raising rates and is now making cuts somewhat belatedly. The Australian dollar struggled toward the end of the year, but the RBA's decision could have a significant impact on this trend. On Tuesday afternoon, Canadian consumer inflation data will be released. Inflation has remained just above 2% in recent months, but it could rise due to the depreciating CAD and accelerating U.S. inflation. The Reserve Bank of New Zealand will announce its rate decision on February 19th. After already cutting rates by 125 basis points, it may choose to pause and assess the economic landscape. On February 21st, Flash PMI estimates will influence European session trading. Recent data has suggested improving sentiment, and confirmation from the latest figures could encourage euro buyers. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.